Hello everyone, Philip Norton here with another chart breakdown for you, a little technical analysis on HUYA. This is really actually the third Chinese tech stock I've taken a look at today. So some stocks I've been following for a while now. So just wanted to give you guys a little breakdown of what we're seeing. So we'll take a look at the daily chart and kind of see how the trends are shaping up and really what we can watch going forward and where are buy points and sell points perhaps and what to do. So just my thoughts out here in the video for you guys. It'll be the last one I'm putting out today, and then we'll be able to come back here in a couple weeks and relive what's actually gone on and what we're continuing to see. So don't like to keep a lot of indicators on my charts. In this case, we've got the VWAP and the 9. I really haven't paid much attention to the 9 in the stock. I really only use that to watch major trends. So as you can watch the uptrend, you'll see it kind of work off the 9. And so using that 9 to watch for break of trend is always a good thing. Doesn't work too much during consolidation and stuff, but only really fast-moving stocks. So in this case, the 9 won't come into play too much in there, but we can draw a couple trend lines, right? So we have the long-term trend line from its IPO right across, and then we have the new downturn trend line from its high in that. So with a lot of these Chinese stocks and a lot of stocks from the IPO, you're going to get kind of that pump and dump movement, very, very common. So we see that here where it immediately rushes out to a really big high, almost 3 times the price from IPO, really 3 times the price from the close of the first day. So really tripling the stock in that, and then as it falls back down, almost 50% down in that. So you'll take that first pump and that first dump, and that'll give you really your trend, your up trend line at that. So it comes down, hits the trend line in there, and you'll notice it actually makes a nice little it jumps right into this price action here. So as you were moving up, you had this stall here around $30 with a lot of price action in that. So it kind of consolidated along that price until the 9 caught back up, gave it a little push to continue its uptrend. So as we pulled back, we pulled right back into this price action in there. Really like 20. So if you look at it, what was it? 28.40 in there. So right down here at the bottom of this price action, almost to where it meets the 9, right? So go ahead, give you that pullback to look at, and then of course it continues up, almost like a nice little cup here to form a cup and handle. So you'll see the start of that pattern was forming. We actually saw the same thing for the other recent IPO tech stock, IQ. So we saw a lot of the same thing, right? So you saw that pump into the dump, so pulls back down, hits trend line, and then you get the pull up in that. So you of course then can easily draw, once you had that first, bounce off the trend line in there. So once it started coming down, you could easily draw your downtrend, right? So from high to the next little high here. So that gives us our downtrend line. And so what you'll see is that the stock will then consolidate between those 2 lines, right? You're always going to see the stock consolidate. Well, not always, but usually you'll see the stock consolidate between the 2 trend lines along the VWAP after you get that pump and that dump. So it then starts to trade sideways right into the consolidate, the cross of those lines, which happens to be right at VWAP. So we saw the exact same thing when we looked at IQ. You get that consolidation till the lines cross, and then the lines are really at a crossroad for that of what we're going to do now. Are we going to continue and break? Are we going to continue on the uptrend line and continue to push? Or are we going to say, no, this is more, the downtrend is stronger than the uptrend? And of course, anyone following what's going on in China right now with the trade war, the devaluation of the yuan, you are going to see that China is in a bear market, right? So it is barely in there, but it is in a bear market. So they are suffering quite a bit. And so with all of the tension going on there, the stock, of course, chooses the downtrend over the long-term uptrend. So while a lot of people, following this company as well as the people following IQ, they're sitting there telling themselves, well, this stock is, such a great stock. Its future is so bright. It's going to make so much money. And that may be the case, but at the moment, it's not profitable, right? The stock is still a risky bet. It's still early, especially it's been just recently, became a public company in that. So its own public company at least. And so with that earliness, it doesn't have a lot of leverage. You find stocks that have been around and traded for a long time and are very profitable. They usually can hold uptrends better, even in bad markets. Stocks like Boeing and stuff like that. Even when the market is bad, the stock will usually hold support a lot better because people know the stock is not going anywhere, right? They have got plenty of cash reserves and support for that company, so people aren't willing to bail out as much. With unprofitable companies and young companies, especially fresh off an IPO, usually the down trend is going to continue in that. So that's what we see. It consolidates in, downtrend wins, and we, of course, finally break uptrend. So we come back here and we'll retest that uptrend in that, but we can't get through it in that. We don't even get back to the downtrend line. But so, and you can see, and then we continue to follow the downtrend. We actually did get a nice little bump here into earnings. So here's into earnings. So the stock did like to give us a little pop. It looked like it was breaking downtrend into earnings. Of course, this was just to ruin a lot of people's day. A lot of people were buying it into earnings, hoping that the stock would produce some ridiculously great earnings that were good enough that investors would say, I don't care about the Chinese market, I have to be in this company now. That wasn't the case. The company didn't produce bad earnings. It didn't miss all the numbers and fail. It was a lot like the rest of the Chinese stocks, especially the young tech stocks. The company is growing. It is pushing ahead as planned. However, as planned is not good enough in the current market conditions. And so we saw a huge drop. Now, here's where it kind of becomes a little interesting now. So brink right back into downtrend. So almost a little kind of bull trap in that into downtrend. But here's what we're looking at. So if you actually look back at this point when it hit the uptrend line, as we told you, it was right in the middle of all of this price action, right? So you have all this breaking it, but closing above, breaking, closing above, which is a very bearish signal, by the way, that it continues to break and close back above this line as it consolidates over to the 9. You would have been, anyone watching it over these days would be just waiting for it to hit the 9 and then break above the last daily candle, and then you would have been on a rocket ship. Anyways, so we have that trend line. And so if you notice, the stock has come directly back to that trend line, and we are now sitting on it. Looks like, in the last few minutes, we've gone below it. We actually, if I jump to the 5-minute, you'll see we've been zigzagging around this trend line. My bet is that as we as we get closer to the end of the day, we'll probably pull back up, pull back down, right? So we're just kind of snaking around this trend line, and it's holding there because the stock really doesn't know what to do. Does it, continue its down? Does it, hold support and then, continue to go up? My guess would be downtrend. You might actually see a little consolidation because you had such a big drop today. 14%. It would make sense for a little profit taking, so people to buy it up into the trend line in that. So you might see some consolidation over the next couple of days here through the end of the week up into the trend line before continuing its next down move. So at a very, very risky place here for the stock. I will condition that with I do really like the company long term. I think the selling may be a little overdone at this point, but that doesn't matter because what's going on with the Chinese market, what's going on with the sentiment towards these stocks, and the trend is completely bearish. So I would, and now that earnings is out of the way, usually a stock, as you can see with all this consolidation and hanging around, even though it was going down a little bit, wasn't moving that fast because you had earnings coming, right? People don't want to sell out before earnings. They want to hold. They want to wait. They want to see what's happening. Now that earnings is gone, you've lost a lot of the catalyst for a move up, right? So while you may see over the next couple of days volume drop off, or actually over the next couple of weeks volume drop off, it's still really, the sentiment is very, very bearish. So like I said, I would imagine you might see a little bit of consolidation here under this trend line before the next move down. But for anyone looking at trading this, of course, if you want to invest, you know that you're looking at a move down, so you can always hold on and wait a little longer. Of course, if it does happen to get some good news, maybe some, Trump changes his view on the trade war, and it breaks trend line, then you've got yourself a time to get in above trend. If it closes above this trend line, very, very bright opportunity. But otherwise, I would actually be looking for a short position once it breaks the low. So once it breaks here, 27.66, so probably about 27.50. Once we hit that, I would be looking to get in for a short position and ride it down at least to the next pivot in that. So you get a little bit of bounce here at 24.50. You might even see it get all the way down to this consolidation period here in the 19.20 range. Since the consolidation's around 19, I would imagine 20 would be a good support just because it's a large dollar amount. So that's what we're looking at. It is scary. I know a lot of people that are holding and very bullish are not liking that technical breakdown, but that's what we're looking at. So my recommendation in that is to protect yourself a little bit. If you are long-term bullish, sell a couple puts. Sell some $25 puts, or maybe $25 to $20 puts in there for, say, probably October, end of the year. And that way you are protecting yourself. If it goes down further, while the puts won't, make up for all of your losses, if you sell a couple of puts, those can then double, triple in price potentially, and then you flip them, right? So it's what I like to do when I have a stock I like long term, but it's currently in a downtrend, is I will sell short-term puts as the downtrend comes, and then as that trend reaches the pivots and the points that I think it's going to hit, I will then flip those to long-term calls. So maybe some 2020 calls on the stock. And so then you are basically buying some cheap puts, letting them double in price, and then flipping them for cheap calls at the bottom of that fall. And then, of course, if the stock does break trend and start to race up, you still have all of your shares or your current calls, and you still have that profit potential. So just my thoughts in there. Please let me know what you think. Comment below, and if there are any stocks that you guys are watching, looking to invest in, but you aren't sure how the technicals and stuff look, I'll gladly give you my opinion, and I can definitely do a chart review on them for you. So please let me know what you'd like to see next in that. So thanks, everyone.